Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, December 8th, which happens to be my daughter Paige's 12th birthday. I don't think she's watching mortgage updates, but happy birthday, Paige. It's about noon on the West Coast, and mortgage rates have stayed pretty flat since we last talked. Last week, when I updated you guys, it was at 6.29% was the average conventional across the country, 30-year. And today we're at 6.32. There hasn't been a lot of news to move the markets. Everybody's kind of holding their breath and looking towards next week, and actually tomorrow too. Tomorrow we get producer inflation numbers, which aren't as market moving as consumer numbers, but still important to look at, and we expect them to be positive for us. And next Tuesday we get consumer inflation for the month of November. Again, we expect that to show a month-over-month decrease and a year-over-year decrease, which should be positive for the markets. And then Wednesday, we get the Fed. The Fed has their meeting, and they'll be releasing their comments and doing their press conference. And we all expect them to raise the rate by 0.5 point. That's been kind of baked into the markets. But the most important part, like we talked about before, is the comments they make in the press conference and the tone they take. So if they take a softer tone, then we should expect some positive movement. If they come out and say be a lot harsher and continue to pound the desk, so to speak, then we could have some negative movement in the market. So that's something to look forward to. So this week I wanted to share with you guys this, which is a combination of a lot of the different industry experts with their housing forecast for 2023. And I want to concentrate on house prices because this is something that's been in the news a lot and seen, people forecasting big drops like JBREC, which is a real estate consulting firm, a 22% drop, or Zonda at -10, Goldman Sachs 5 to 10%. And then on the opposite end, you have CoreLogic or, Realtor.com or NAR and these other ones that have a positive outlook. They think home prices across the country will go up year over year. So, basically, your crystal ball, my crystal ball, their crystal ball are all, about equal. Obviously, these companies all have very smart individuals looking at these numbers, and they're coming up with different results. And so, everything's kind of up in the air. And I'd like to keep a more positive outlook and think, maybe CoreLogic is going to be more accurate with like a historical year-to-year number of about 4%. But one other thing to keep in mind is that this is all going to be regional. So this is nationwide. So our area on the West Coast, which went up more, we might have a little bit more negative of drop just because we went up a lot higher. So with that being said, though, and looking at the worst case scenario, I wanted to share this with you guys. So what this graph shows is hypothetical drops in U.S. home prices from peak to trough. So peak to trough is its very highest to the very lowest we think it's going to be. So 20%, which was that real estate consulting firm, is this line right here. That would take us prices back to February 2021 levels. So that means anybody that bought prior to February 2021 would still be doing well for themselves. They would have made money hypothetically since that point, even if prices dropped 20%. 10%, which is still a big negative drop, and you saw a couple of different the companies on there predicted about 10% drop. That would take us back to October 2021 levels. So a shorter period of time where people that bought prior to people that had bought in February 2021 would be positive at that point. They would have made money because things went up so quickly. So really, I just want to share this. You show the worst case scenario really isn't as bad as it could be because we did have so much growth. If you bought prior to the pandemic, you're still have made quite a bit of money depending on where you're at. So really, the only people we have to be concerned about are the folks that bought, depending on the drop. But let's say worst case scenario and prices drop 20% on the West Coast. Then anybody that brought from February 2021 going forward are the ones that are a little bit more at risk. And really, it would be if you put 40% down, you're not going to be underwater. But if you did a VA loan and put 0% down and you bought your house for $500,000 in let's say October or February 2021, and prices go down to 450 or 400, then you're going to be underwater. Like we talked about before, most people are not buying for a short-term investment. So if you had buried your head in the sand and, you don't look over the next couple of years, by the time, let's say 2025 rolls around, you're probably going to be back in the positive. Even the negative experts that are predicting these big drops over the next year are showing things bouncing back starting in 2024. So, that's just one way to look at it. Even hypothetically in this negative drops, still most of the buyers over the last few years still should be fine. It's going to be a little jarring because we did have such big increase, but because of that increase, they're protected. So that's all I had for you guys today. Like I said, we're going to be looking forward to next week and tomorrow with these inflation numbers. Fingers crossed. those inflation reports coming positive. The Fed says nice things on Wednesday, and the markets react favorably. And if we continue on the trend we're at right now, we might get down in the fives for the average 30-year conventional, which would be great for everybody to see. So if you need anything at all, please do not hesitate to reach out. I'd be more than happy to help. Have a great week, everybody.